Okay, let's unpack this. Welcome to our deep dive. We try to cut through the noise and get right to the core of things using the sources you give us.
Sounds good.
So today our focus is really on the latest in U.S. crypto regulation. We're zeroing in on one key piece of legislation, the Digital Asset Market Clarity Act. The Clarity Act.
That's right. And it's a pretty significant attempt to build out a clear regulatory framework for digital assets here in the U.S.
Yeah, and based on the sources, it seems like it just cleared a major hurdle, moved through some key House committees.
It did. The House Financial Services and Agriculture Committees both advanced it.
And those vote counts are kind of interesting, aren't they? The Agriculture Committee was pretty strong, 47-6, but Financial Services was, well, tighter, 32-19.
Yeah, those numbers definitely hint at the, let's say, different perspectives, even among lawmakers on this one.
Right.
But the main thing is it's now heading to the full House floor. That's the next big step.
And the people behind it, like Representative French Hill mentioned in the sources, they see this as potentially positioning the U.S. to, lead in Web3 innovation.
That's the stated goal, absolutely.
Okay, so our mission here is to really pull apart what this Clarity Act actually says, what it aims to do, and maybe why it's stirring up discussion. And we're sticking only to the sources provided.
Right. So if we look at the big picture from the sources, the fundamental goal, as Representative Hill put it, is a fair, functional, forward-looking regulatory framework.
Okay. Fair, functional, forward-looking.
The idea is really just clarity for everyone in the digital asset space.
And a huge part of that clarity seems to be defining who's actually in charge, right? The SEC versus the CFTC.
Exactly. The bill specifically tries to delineate the roles for both the Securities and Exchange Commission and the Commodity Futures Trading Commission, trying to clarify who oversees what type of digital asset.
Makes sense. That's been a fuzzy area.
Yeah. It has, and it doesn't stop there. It also lays out provisional registration requirements, particularly for entities like crypto exchanges.
Okay. So exchanges, brokers, those kinds of players.
Yes, exchanges, digital commodity exchanges, brokers, dealers under the CFTC. The sources say they'd face rules about disclosure, keeping customer assets separate. Right, and record keeping. Basic stuff for financial markets, but being applied here.
That definitely sounds like bringing some standard practices, maybe accountability into the mix. What about individuals or developers? Does it touch on them?
It does, and that's an important point in the sources. It explicitly mentions protecting users' rights.
Like what?
Like holding crypto in their own non-custodial wallets and engaging in peer-to-peer transactions.
So self-custody, protecting that ability for people to hold their own keys, essentially.
Precisely. And that's, a core principle for a lot of people in the crypto world. Seeing that potentially addressed in law is pretty significant.
Yeah, definitely. And I think I saw something in the materials about developers, too. An amendment.
You did. Representative Hill introduced an amendment during the committee stage. It specifically dealt with the treatment of certain non-controlling blockchain developers.
Okay, what does that mean, non-controlling developers?
Well, the idea was to clarify that certain developers, or maybe service providers who aren't really controlling the network or funds, wouldn't automatically be classified as money transmitters.
Because that label comes with a lot of baggage, right?
A lot of baggage. Heavy licensing, reporting, compliance, things usually meant for financial institutions. Applying that too broadly could, potentially stifle basic software development.
Got it. So trying to avoid scaring off the builders.
Seems to be the goal of that amendment, yeah.
Okay, so it sounds like it's trying to cover all the regulator roles, exchanges, users, developers.
Yeah.
But those committee votes suggest it wasn't exactly a smooth ride. What did the sources say about disagreements or pushback?
Well, yeah, despite moving forward, there are clearly different views. Your sources mention, for instance, Ranking Member Maxine Waters on the Financial Services Committee. She proposed an amendment citing concerns about potential conflicts of interest, specifically mentioning allegations related to former President Trump's crypto businesses.
Okay, so suggesting the bill could potentially be used for personal gain. That's a direct concern raised.
Right. And then there was another one from Representative Brad Sherman.
What was his angle?
According to the sources, his amendment aimed to prevent what he called potential future bailouts of the crypto industry.
Bailouts.
Okay.
So fundamental disagreements about the government's role and potential risks.
Exactly. And these proposed amendments, even though they didn't pass in committee, they really highlight the range of concerns and frankly, the debate's still happening within Congress about how to regulate this space, who benefits, who's protected.
So pulling it all together from what we've seen in the sources,
Yeah.
the Clarity Act is this major push for a U.S. regulatory framework for digital assets.
Yeah.
It wants to define lanes for the SEC and CFTC, set rules for exchanges, protect self-custody for users, give some clarity to developers.
While navigating some pretty significant disagreements and alternative ideas.
Right, reflected in those amendments and debates.
And understanding these legislative efforts, like this Clarity Act, possibly going for a full House vote, it's really crucial if you want to get a handle on the potential future for digital assets, for Web3 innovation, right here in the U.S.
It really does set the stage for what might come next.
Absolutely. It shapes the whole environment.
Definitely. So thinking about those stated goals making the U.S. a leader in Web3 versus those concerns raised about, say, potential conflicts or future bailouts, it makes you wonder, how might these different approaches ultimately affect innovation? And, access for everyone trying to participate in this market. Something to mull over as this bill continues its journey.